Hello again and welcome to Money Matters. After 2 years of turbulence, the Hong Kong Monetary Authority's number one job is to reassure the banking and financial industry that the system will remain stable. In an exclusive interview, the authority's chief executive, Eddie Yu, talked about how they plan to accomplish this, as well as other projects in the works. Eddie, Hong Kong has seen a lot of upheaval with the protests in 2019, followed by the pandemic, and then the national security law, and most recently, annexes to the basic law. How do you ensure foreign companies that Hong Kong can still maintain its status as an international financial center?
And I think Hong Kong has proven that in the last 2 years, despite all that's been happening, our financial system has been remarkably stable. If you look at the exchange rate, it's been leaning on the strong side of the trading band. In fact, there were inflows in the last year amounting to some $50 billion US dollars. Deposits have been going up. So despite all that's been happening, Hong Kong's financial system is very resilient. And apart from financial stability, what they also value in terms of a financial ecosystem is things like free information flow, free capital flow, common law system, independent judiciary, a good talent pool, etc. And from the feedback I got, all these remain sound and intact. Nothing has changed. So the financial ecosystem is still very conducive to them continuing to pursue their opportunities here. If you look at the overall picture, if you look at the asset management firms, for example, in 2020, the number has actually increased by about 4%. We've now got about 1,900 asset management firms here. But of course, there could be firms that might be leaving. Some that we know, because we know most of them, being an investor ourselves. Some are leaving for strategic reasons or for business opportunities. If you're an activist shareholder type of hedge fund, you might actually want to pursue opportunities in other markets than in Hong Kong. But there are others coming in, especially given the vibrant capital markets in the stock market, for example. So there will be people coming in and going out. In terms of assuring the international financial community, I think one, communications is important because it's all about confidence. In terms of foreign reserve, we've got more than 500 billion US dollars. There's a lot of buffers in the banking system in terms of capital and liquidity. And thirdly, we have to make sure that both ourselves and the financial institutions are good in contingency planning, and we stress test them.
So Hong Kong does remain a major financial hub, but does it then become China's international financial hub, both in and out of China?
Right.
And how strategically important would you say this is?
Well, Hong Kong has always been the dominant financial gateway to China. It was and it will be. And this is important in that Hong Kong has always been serving as a bridge between the East and the West. If you look at the two Connect schemes, for example, Stock Connect and Bond Connect, yes, you are talking about the mainland capital markets. But on the investor side, you're actually talking about international investors wanting to diversify their portfolio and wanting to get a dip in the mainland's capital markets. And they do it in Hong Kong. And that actually brings not only the mainland talents coming to Hong Kong, but also international talents. Because with this move by international investors, including the inclusion of the mainland stocks and bonds into the international indexes, there's actually a need for many international firms to bring international talents here to serve their investors.
And what role can Hong Kong play, given that the U.S. is still cracking down on Chinese companies listed on the New York Stock Exchange? Do you see more Chinese companies IPOing in Hong Kong and also in China, and more money coming in because of this?
Hong Kong, as you said, is a place where they feel that the system is robust, where they will not be subject to different threats, and they might come back, and we welcome them. Hong Kong is a very open place. We set up our own financial system in the internationally aligned way, and we welcome any companies, whether it's Chinese or overseas, to come to Hong Kong to list. But this trend, I think, will likely continue. And because of the international investors' interest in Chinese assets, And I think that there could be international capital coming in to subscribe to these shares. And you can see that many of them are actually very well subscribed. So I think this flow of capital might continue in the next few months.
Are there any risks if we start to see some tapering out of the U.S.?
This is actually the biggest risk that is on the horizon that is giving me some concerns. Because what you're seeing now in the financial market is partly due to the very low interest rate environment we're in, partly due to the very expansionary, accommodative monetary policies by central banks. And if there is a disconnect caused by the very low interest rates, if there should be a change in that monetary policy direction, whether you're talking about tapering, reducing the bond purchase, or even thinking about interest rate increase because of inflation, then I'm afraid that the financial market reaction could potentially be very large and very fast. We've seen the episode in March last year. We've seen the contagion going really fast. In the next correction, there could be a possibility that the correction can be faster and deeper than what we have previously experienced. And also, when we see tapering, the only experience we had was in 2013 with taper tantrum. At that time, there was quite a big outflow from the emerging markets, including Asia and Hong Kong. So if the scenario that you talk about happened, it is possible that there could be outflows from Asia. And this is something that I think we and the financial institutions and the investors have to be very prepared for. For us and the financial institutions, it's really about enhancing your buffer, preparing for contingency. And for the financial institutions, we stress test them with very brutal parameters, so that we make sure that in the event of a big shock, the financial system is still all right.
With QE and with the Hong Kong dollar pegged to the US dollar, it is bringing the valuation of the dollar down, and it's also making local assets more expensive. I mean, is there room for some fine-tuning, you think?
If you look at the last 2 years, when Hong Kong was going through all the different challenges, the one thing that has not been shaken or doubted was our exchange rate stability. And it was primarily because of the very strong market confidence in the linked exchange rate system. So it's been operating well. It's been instilling strong confidence in the international financial community. So we see no need and no reason to change it.
The HKMA has managed an exchange reserve of 400 to 500 billion so far. Are we going to dip into this at any point, given some of the difficulties Hong Kong is seeing right now?
I think it's actually important to keep a very strong buffer to protect financial stability, especially when Hong Kong is going through these challenges. And it is to really cement the confidence of the international financial community about financial resilience in Hong Kong, no matter what happens. And I think it's important to keep that ample buffer instead of, as you said, transferring it for other uses.
But I mean, Hong Kong is seeing its highest rate of unemployment now, and there's no help for the unemployed. And some of the smaller businesses also need help. At what point do you say, okay, we're going to use our buffer, we're going to use some of this emergency fund?
So of course, the use, the government has to be sympathetic to the needs of the community to address the current difficulties that they're in. And I think the government has done a very good job in rolling out different anti-epidemic support measures, whether it's through the banking system or through the fiscal measures. And they actually have the ability to do that. I don't really see any need for the foreign reserve to be used for expenditure purposes, especially from the financial stability point of view. We've actually done quite a lot in terms of helping the SMEs. For example, together with the banking system, we've rolled out the pre-approved payment moratorium for the loans for the SMEs, and this has been extended 2 times already.
When Money Matters continues, we talk digital currency and fintech with Eddie Yu. Stay with us.